My name is Paul Greenwood. I was the co-founder and CEO of GDS Link until recently. GDS Link started 17 years ago and was in the business of providing credit decisioning software for any kind of lender, lending any type of product. We had most of the big fintech companies, a lot of banks, and some credit unions as well. Mm-hmm. So we had some experience in the credit union space, but credit unions were not our main driver. Mm-hmm. So fintechs, the lenders such as Best Egg, Lending Club, Prosper, Goldman Sachs before they decided to get out of the business. So we've seen the lending industry in general really evolve over the last 15 plus years.
Yeah, and a lot of that evolution has been the technology behind it. I mean,
it has,
having been in fintechs for 17 years, you've seen a lot.
I have.
So many people, just maybe 5-10 years ago, a lot of people around this exhibit hall would not know the word fintech, and you've been in it for 17 years. So talk a little bit about the evolution of fintechs as you've seen it over the years.
So fintechs were really born, believe it or not, out of the payday industry. So payday was one of the first industries to really lend online, really automate everything end to end, not just the credit decision, but KYC, fraud. The goal was to kind of get somebody through the door as quick as possible. And then a lot of fintechs started attending the payday industry conferences to understand how they were managing to really scale, talking tens of millions of applications a month without any human interaction whatsoever.
Wow.
Very little touch. So the fintechs really piggybacked off that industry, but obviously they were more focused on prime, super prime. And the other big thing with the fintechs was the marketing machine that goes behind it.
Yes.
The credit karmas, the lending trees, all of those started to evolve at the same time as well. And it's a generational thing as well. So what I heard in today's sessions this morning was there was a lot of generational differences between the CU industry and what the fintechs see. A lot younger generation coming through. Nobody wants to walk into a branch. Everything's online. And again, the way that the fintechs market, it's all on Facebook, Instagram, Snapchat, right? So they're constantly appealing to the younger generation and driving a lot of traffic through that. So that's where the fintechs see so much more of the population wanting different credit products to the credit unions. And
you're absolutely, it's interesting because I was looking the other day at the stats, and I think when I started in credit unions maybe 20 years ago, the average age of a credit union member was about 47, and now it's 53.
Right.
So we went backwards from what we had been talking about. So this is a great opportunity not only to make some loans that probably have better yield, and that they wouldn't see because they don't have that marketing engine.
Right.
At the same time, they will be able to make them in a way that is convenient to the consumer because it's going straight through, the mobile app that they're using. So,
exactly.
Yeah. And so how can credit unions work better with fintechs?
Yeah. So fintechs look at credit unions and banks as partners more often than not, right? So one of the things that we're here to talk about today is the ability to work more closely with the fintechs. So one of the fintechs I work really closely with declined 90% of their loans. And because they're only lending to prime and super prime, there's such a large quantity of borrowers that are still very good quality of credit, or credit quality, but the fintechs just decline them because they're not above 720. So one of the things that we're looking to put together is a program around helping credit unions and banks look at the loans that these fintechs are declining. And again, we're talking tens of millions. Just one fintech alone, I know, declines 6 million applications a year. And building a mechanism or a marketplace where these credit unions and banks are able to look at these loans that have been declined that still fit within their credit criteria, that are still quality borrowers, but they would never see through any of these marketing channels, because the borrowers are just going direct online through all the various channels that are now available. And again, if you're a small credit union, to get onto Credit Karma and Lending Tree, there's a lot of technical help and expense that you would need to be able to do that.
Yeah. And so we're talking a little bit about Loan Exchange, which is a program, a new platform that you're going to be bringing to credit unions and banks. And so talk a little bit about the origin of that, the origin story, if you will.
Yeah. So again, over the years, just seen a gap where a lot of these big fintechs just decline these loans. There are a couple of specific second look lenders, but not many. But the majority of these loans, and again, they're still good borrowers with good credit quality, just get dropped, right? So they don't get looked at. So what we're looking to put together is a program where we would house the credit criteria for the credit union within our platform. The fintech would send us all their declined loans, and we would go through and see if any of the credit unions would be able to approve this borrower that fit with their within their criteria. And again, any loan product, from mortgage, small business, student loans, personal loans, etc., credit cards. And again, what's important, within their geographic location. So we would get the declined loan, see if it fit the criteria for that credit union. If it did, send that loan offer back to the fintech. The fintech would say, unfortunately, you've been declined with us today, but one of our partner credit unions has approved you. It might not be the exact loan amount that they're asking for, but it might be close. And if the borrower would like to accept that loan, they would click on that offer on the fintech's website, and it'd be simply redirected to the credit union's loan origination system, whether that's Meridian Link or one of the other loan origination systems. And then the borrower would have to fill out the application again, but they've already been pre-approved by us on the backside, so they know that once they fill out the application, that they're going to be approved.
Yeah.
So it's a really easy way for the credit union to capture some of that declined application pool that they would never see.
Yeah.
And it's low touch. There's no integration needed. They would simply give us the credit criteria that we would house at Loan Exchange, and we would do the rest.
Yeah, I was going to say, it sounds like a pretty light lift on the credit union side.
Yeah, it is.
And that's something that they need to, because, the fintechs in particular, at least before probably this past year, had a lot of money to put into marketing, right?
Yeah.
And to put into building those platforms, and to put into paying the talent.
Right.
Because, credit unions talk, generally speaking, about the war for talent a lot.
Right.
But finding people in these high demand, high paying jobs, it just doesn't make sense a lot of times for credit unions to have them in-house. It's not their expertise, they're lenders, right?
Especially if they're really small.
Right.
Yeah. And they have 4 or 5 branches in a geographic location. They're just not going to have the marketing budget or the talent or the people. They have talent people, but they just don't have the resource bandwidth to do what's needed to do to be able to compete.
Right.
So partnering is an easier step.
Yeah, and I think that's part of the evolution of fintechs too. I feel like when they first came out, it was a lot more us versus them kind of thing, and now it's more like working together with the banks and the credit unions.
Right.
Which I think is a really good evolution, because credit unions have the trust of their members, banks have the trust of their customers, and then the fintechs, they have the technology and the convenience and all the stuff that the banks and credit unions rarely do in-house, on their own. And I think too, one of the important things that we focus on at the Credit Union Connection is highlighting the business partners that can help keep credit unions relevant. I mean, and this is like a perfect fit for that. Yeah. And so, especially when you're talking about the age of membership going up and up and up.
Right.
But you talked about smaller credit unions too. So with small credit unions, how do you ensure that the pricing is going to fit for them? Because that's often a problem. Yeah,
so the way that the pricing would work, and again, I've been talking to the fintechs, they would charge a small percentage fee of the overall loan amount, which is very standard. and that's a way for them to recoup their marketing spend, and also helps helps their bottom line, right? So if they can monetize their declines in a very low touch, efficient way,
right?
That's why they would love to partner with the credit unions. And again, I've talked to the fintechs, and they're really interested in this program.
And so, what kind of credit score buckets are you looking at to be
anything below 720, right, which is their cutoff. So, and again, a lot of credit unions go down all the way into the low 600s, or even below that for some products. So the band between where the fintechs are declining and where the credit unions decline, it's quite large.
Yeah, sounds like a lot of opportunity there for sure. And not only new loans that you wouldn't see otherwise, but a better margin on those loans too, which is always important. So I'm thinking, what else? I'm going to let you have the final word. Final thoughts on.
So again, it's a new program. We're just putting this program together. So what we're looking for to get the program off the ground, and again, we have the buy-in from the fintechs, is several credit unions that are willing to do a test with us. And again, it's a no-risk test. We're looking for them to just give us their credit criteria for the different loan products that they wanted to offer, and we can then go and look at the TAM. So based on your 5 credit unions in this geography, we see that you would have, there's 20 loans that this lender would decline that you would have approved. So it's really understanding the market sizing by credit union and geography. So we're really looking for credit unions that are willing to work with us, just to give us the credit criteria so we can do a market sizing. So that's step 1.
Yeah, great. That sounds awesome. So if a credit union were interested, how could they get in touch with you?
So they just need to go to loan-exchange.com and just fill in the contact us form.
Awesome. Excellent. Well, thank you. We will definitely include that in the show notes as well. Appreciate having you today, Paul. Thank you.
Thank you for having me.